During the Battle of Mobile Bay in the American Civil War, as his ship was being attacked by enemy torpedoes, Admiral Farragut famously ordered, "Damn the torpedoes, full speed ahead." Farragut's fleet won the battle. The quote also perfectly illustrates the attitude necessary to buy into the stock market right now. Teetering at historically high values, the stock market is facing several events in the upcoming days and weeks that could potentially send prices crashing. These torpedoes include the next US employment report, the Fed rate decision, and the UK's up-and-coming Brexit vote, which will take place on the 23rd of June. Now in May, 38,000 jobs were created in the US versus an expected job creation tally of 162,000. Now this is a lousy result that in itself undercuts the only pillar left holding stock prices up, the relative strength of the US economy. While the US economy has been lackluster, it has been stellar compared to the global situation. Strong US employment numbers in recent months and quarters have cited as a major indicator that the US is nowhere near a recession. However, the latest data tells a different story. Of course, most economists believe that the May number is just a one-off. It is widely expected that June and July numbers will be far more reflective of the recent trend, between 150 and 200,000 jobs created. I suspect that will probably be the case. But if it isn't, and we get another horrible number, look out. Talk at this point of a faltering US economy and recession would likely hit stock prices hard. Then there's the Fed, which met earlier this week and left interest rates on hold. Why did it leave rates unchanged? One is the recent employment report. The central bank will likely want to see the June numbers to make sure that May really was a one-off. The other reason is that the Fed will likely want to wait for the Brexit vote. A little bit more about Brexit in a second. If these two things go well, then the Fed will consider a rate hike next month. But again, it is a little more and more difficult to predict the effects of another rate hike. Markets across the globe could react in a negative manner. The most threatening and dangerous torpedo is the upcoming Brexit vote. The UK will vote on the 23rd of June whether or not to stay in the European Union or separate from it. The UK is not part of the Eurozone that shares a common currency, the euro, but it is part of the greater union and trading bloc. Membership in the EU has advantages and disadvantages for the UK. The key advantage is that the nation gets increased leverage, trade deals as part of an overall bloc of nations that it would individually. The major issue is that of immigration and the free movement of people across the EU, plus the added pressures of the Syrian refugee crisis. A vote to exit the Union would likely be bad for the stock market, at least in the short term, because of the uncertainty that would generate. An already alien European economy would not be helped by losing one of its strongest members. A British exit would weaken the EU forever. But there's an even bigger risk from the exit vote. It's called contagion. The Syrian refugee crisis has put enormous pressure on members of the EU who are forced to accept refugees whether they can afford to or not. The refugee issue, among other things, has given rise to exit movements in several other member countries. A British vote to exit would no doubt embolden and empower exit politics across Europe. More exits could disintegrate the EU and thrust the continent into a recession, dragging the US with it. Polls show there has been a strong recent trend toward a British vote in favour of exit, but it's too close to call. Bookmakers are suggesting 60% will vote to remain and stay in the Union. British polls are notoriously unreliable, and the bookmakers are probably a better bet. But you never know. These are interesting times, and I think the times will stay interesting for a while. It may get a little crazy in the short term, but there is less to worry about if you're focused on the long term as an investor. In fact, there may be great opportunities in the quarters and years ahead for long-term investors like us. I will closely monitor the situation and I will keep you posted if and when any of these torpedoes hit. This is Pedro Robert, the founder of Wealth Insider Network, wishing you investing success. Goodbye and thank you.